All right, so get ready because we're about to do something pretty wild today.
Oh, yeah.
Yeah, we're going to time travel, but not in a, DeLorean or
Wayne
anything.
Machine.
Nope, but we are going back to 2009,
2009. Okay, I'm intrigued.
right after, the whole financial world basically exploded.
Oh, right, 2008, the Great Recession.
Exactly. And we're going deep into Warren Buffett's letter to Berkshire Hathaway shareholders from that year.
Ah, so like a snapshot of his thinking during the craziest of times?
Yeah, exactly. And this letter, it's not just like boring financial
I
stuff.
mean, it is Buffett, so there's got to be some of that, right?
Of course, but it's more than that.
Okay, so what are we talking about? What's in this letter?
Well, for starters, how Berkshire Hathaway actually made money when everyone else was freaking out and losing everything.
Okay, that is impressive. Like, how do you even do that in a financial crisis?
I know, right? We're also going to look at Buffett's, how do I even describe it? Like his unique way of thinking about those essential businesses, the ones everyone relies on.
Yeah, okay, I get it. Like utilities and stuff.
Exactly. And oh, get this. He actually admits to making a major business blunder.
Oh, no way. The Oracle of Omaha making a mistake. I got to hear this.
Don't worry, we'll get to all of it.
All right, let's do it.
So before we get too deep into the letter, I think it's helpful to really set the scene. Go back to 2009 for a minute.
Yeah, okay, good idea. Paint us a picture.
Like what was going on in the world? How are people feeling?
So picture this. The global economy is like a wobbly table, you know, about to tip over.
Yeah, things are super unstable.
Right. Nobody knows what's going to happen next. Businesses are shutting down left and right, and fear is everywhere.
Yeah, gloomy times for sure.
Totally. But here's the thing. Amidst all this chaos, Berkshire Hathaway reports that their net worth actually increased by almost $22 billion that year.
Whoa, hold on. They're making money when the world is falling apart.
Yep, their per-share book value grew by almost 20%, which is insane, given the circumstances.
So how did they do it? What's their secret sauce?
Well, even Buffett admits that maintaining that kind of growth gets harder as the company gets bigger. It's like trying to steer a giant ship with a tiny rudder.
Okay, that makes sense. So how did they navigate that storm?
I think a big part of it comes down to their investment philosophy, their overall approach to business.
And that's where Charlie Munger comes in, right? Buffett's partner.
Yeah, he's the yin to Buffett's yang.
And Munger's the one who's obsessed with this idea of always invert, isn't he? He got that from some mathematician.
Yeah, Jacoby, I think.
Right.
But honestly, I think about it all the time.
Yeah, me too. But what does it even mean for, normal people who aren't math geniuses?
It's actually pretty simple. It's about flipping your thinking, instead of focusing on what you want to happen.
You focus on what you don't want to happen.
Right. It's all about avoiding the big mistakes, the things that can really sink you.
So it's more like playing defense than offense.
Exactly. Like take their approach to choosing businesses, for example.
Okay, what's their strategy there?
They stay far, far away from companies with unpredictable futures.
Really? Even if those companies are like the next big thing?
Yep, they're not chasing fads. They're looking for solid, reliable businesses, the kind that can weather any storm.
So steady and boring is better than flashy and risky.
For them, absolutely. It's all about minimizing risk.
Okay, that makes sense. But how does that translate to, the financial crisis?
Well, another key part of their philosophy is maintaining extreme financial strength, having tons of cash on hand.
Yeah, I've heard Buffett talk about that, like it's their superpower.
It is. They call it financial strength. And it basically means that they never have to rely on anyone else for help.
So they're not begging for bailouts when things get tough.
Nope. In fact, they're the ones giving bailouts during the crisis.
Really? They were lending money to other companies.
Yeah, they put something like $15.5 billion back into the market when everyone else was panicking and selling.
Talk about being in the right place at the right time. I mean, that's incredible.
It's a great example of how their conservative approach actually paid off big time during the crisis.
So this always invert thing, it's not just a catchy saying, it actually works.
Right. It's a core part of their DNA, and it's a big reason why they've been so successful.
Okay, so we've got a handle on their philosophy, but how does this massive company actually operate? I mean, Berkshire Hathaway owns a zillion different businesses, right?
Yeah. It's not your typical corporation, that's for sure.
So how do they make sense of it all?
Well, think of it like this. Berkshire Hathaway has 4 main pillars. 4 core areas where they focus their investments.
Okay, I like the pillar analogy. It's sturdy.
Right. So the first pillar is insurance. Then you've got regulated utility businesses, then manufacturing, service, and retailing operations, and finally, finance, and financial products.
Okay, that's a pretty diverse mix.
It is. But breaking it down this way helps us understand how the different pieces fit together.
Right, so let's start with insurance, because I've always heard that this is like Berkshire's secret weapon.
Oh, it's definitely been a key driver of their success.
So how does it work? What's so special about insurance for them?
Well, the magic word here is float.
Float, like in a parade.
Not exactly, but it's a good image.
Okay, so what is it?
It's basically the money that insurance companies collect in premiums, before they have to pay out any claims.
Okay, yeah, like you pay your car insurance every month, but you might not get in an accident for years.
Exactly. So they've got this big pile of cash just sitting there.
And they get to invest that money, right?
Yep. And that's the float. And for Berkshire, it's grown from a tiny $16 million back in 1967 to a whopping $62 billion in 2009.
Wait, hold on. $62 billion. That's insane.
It's a massive advantage, and it allows them to make even more money.
So they're basically making money on top of money?
You got it. And another reason their insurance operations are so successful is because they've got some seriously talented people running them.
Ooh. Okay, give me the rundown. Who are these insurance all-stars?
Well, first up, you've got Geico, the one with the gecko,
Yeah, everyone knows Geico.
right? And they're all about keeping their costs super low, which allows them to offer those competitive rates.
And Geico is led by Tony Nicely, right? He's been there forever.
Yep, he's a legend in the industry, and under his leadership, Geico's market share has just exploded.
It's like they've cracked the code for selling insurance.
They have. But then you've got someone like Ajit Jain over at National Indemnity.
Okay, what's his specialty?
He's the guy who writes those crazy billion-dollar insurance policies, the ones that nobody else wants to touch.
Wow, talk about high stakes.
Right.
Yeah.
He's even taken on huge liabilities from Lloyd's of London, that centuries-old insurance marketplace.
Yeah, I've heard of them. They insure, like, everything, right? Even, like, celebrity body parts.
Pretty much.
Mm.
But yeah, Jane is a risk-taking genius.
So he's like the James Bond of insurance.
I like it. And then, of course, you've got Tad Montross, who turned General Re around from a struggling company into a real gem for Berkshire.
So he's like the fixer, the turnaround specialist.
Exactly. He took a company that was on the ropes and made it profitable again.
Okay, so lots of talented people in the insurance world, but didn't Buffett admit to making a pretty big mistake in that department?
Oh, yeah, you're talking about the whole credit card debacle with Geico.
Yeah, that one. What was he thinking?
Well, his logic was that, good drivers are probably responsible people in general, so they'd also be good credit card customers.
So, like, if you're careful behind the wheel, you're also careful with your spending.
Exactly. But it turns out that's not always the case.
It sounds like a recipe for disaster.
It was. The whole thing backfired spectacularly, and they ended up losing like $44 million before they finally sold off the credit card portfolio.
Oh, man. Even the best investors make mistakes.
It's a good reminder that nobody's perfect, even Warren Buffett.
All right, so we've covered insurance, but now I'm really curious about this next pillar, the regulated utility business.
Yeah, this one might seem a bit unexpected.
I mean, utilities, power lines and pipelines, it doesn't sound very exciting.
True. But Buffett sees something special in these businesses.
It's like, what's so appealing about utilities?
Well, for one thing, they're essential services.
Yeah.
Things that people need no matter what's happening in the economy.
Yeah, everyone needs electricity and, heat for their homes.
Exactly. And that makes them relatively stable and predictable, even during recessions.
So they're like the bedrock of the economy.
Yeah, I like that. And another thing that appeals to Buffett is that they require huge, long-term investments.
So it's not like a quick buck kind of thing.
Nope, this is all about the long game.
But didn't he say he usually avoids businesses that need tons of cash up front?
Yeah, he does, but he sees an exception with regulated utilities.
How so? What makes them different?
Well, because they're essential services, they're also highly regulated.
Meaning, the government has a say in how they operate.
Right. And that means they can't just jack up prices or cut corners. They have to play by the rules.
And that creates a certain level of stability and predictability.
Exactly. And Buffett calls this his social compact philosophy. The idea that both sides have to uphold their end of the bargain.
So the utilities have to provide reliable service and invest for the future.
And the regulators have to allow them to earn a fair return on those investments.
It's like a partnership between the private sector and the government.
And Buffett believes that when it works well, this system can benefit everyone involved.
Okay. That makes sense, but it still sounds kind of dry. Like, where's the excitement?
Well, hold on, because Berkshire's utility business isn't just about power lines and pipelines. They're also investing in renewable energy.
Really? So Buffett is getting into the green energy game.
He is. Through Mid-American Energy, they've poured billions of dollars into wind generation facilities.
Wow, so he's putting his money where his mouth is when it comes to sustainability.
And they're not just doing it for the PR. They believe it makes good business sense.
So it's a win-win, good for the planet and good for Berkshire Hathaway.
Exactly. And that's just one example of how they're thinking about the future of utilities.
It's actually kind of exciting when you think about it that way.
Right. It's not just about keeping the lights on. It's about finding innovative ways to power the world.
All right, well, after all that, I'm ready to move on to the next pillar, the manufacturing, service, and retail operations.
Oh, yeah. This is where things get really diverse.
We're talking about a lot of different companies here.
We are. Everything from paint and jewelry to furniture and even candy.
It's like a giant department store of businesses.
Pretty much. But as you can imagine, 2009 was a rough year for most of these companies.
Yeah, the recession hit pretty much everyone hard.
True. Sales and earnings were down almost across the board.
So even Buffett couldn't escape the downturn completely.
Nope. There's no magic bullet, even for the Oracle of Omaha.
But I'm guessing there were some bright spots.
There were. Like McLean, for example, their food distribution company.
Okay, I've heard of them. They're huge, right?
Yeah, they supply groceries and other products to, like, everyone.
And they actually hit record profits in 2009.
They did, thanks in part to their close relationship with Walmart.
Ah, that makes sense. Walmart always seems to do well, even in tough times.
Right. But even with those record profits, their margins were incredibly thin.
Meaning they had to sell a lot of stuff to make a little bit of money.
Exactly. Shows how tough things were in 2009.
Yeah, it was a grind for everyone.
But Buffett also gives a shout out to a bunch of CEOs who managed to improve profits even when sales were down.
So even in a bad market, good management can make a difference.
It can. And Buffett highlights a few examples in the letter, like Dennis Abrams at Benjamin Moore, Susan Schock at Borsheim's, and Jim Isler at H.H. Brown.
So he's giving credit where credit is due, recognizing those who are navigating the crisis effectively.
Exactly. And it's not just those individual CEOs. He also highlights two industrial businesses that stood out in 2009.
Okay, I'm all ears. Which ones?
Marmon and Iskar.
Marmon, that rings a bell. What do they do again?
They're a big conglomerate with a ton of different businesses, everything from railroad tank cars to water treatment systems.
Okay, so very diverse.
Yeah, and they're led by Frank Pydock, who managed to achieve a record pre-tax profit margin of over 13% in 2009.
Wow, that's impressive, especially given the circumstances.
Right. And then there's Iskar, which is an Israeli company that makes cutting tools.
Cutting tools like for metalworking and stuff.
Exactly. And they also managed to stay profitable in 2009, even while they were integrating a big Japanese acquisition.
So they were growing and making money at the same time. Not an easy feat in a recession.
It shows that there are always opportunities out there, even when things look bleak.
You just have to know where to look.
And have the right team in place to execute.
Okay, so we've got these bright spots, but then there's NetJets, the private jet company, which we talked about earlier.
Oh, yeah, that one was a real headache for Berkshire.
They were losing money like crazy, right? I mean, $2 billion in debt.
It was a tough situation, no doubt.
I can't believe Buffett didn't just cut his losses and sell the whole thing.
He probably considered it, but he ultimately decided to double down.
Really? So he saw something in NetJets that made him think they could turn it around.
He did, and he brought in Dave Sokol, the guy who had already worked miracles at Mid-American Energy.
Oh, yeah, he's like the cleanup crew.
Exactly. And together, they managed to steer NetJets back to profitability.
Wow, so another successful turnaround story.
It just goes to show that Buffett isn't afraid to take on a challenge if he believes in the long-term potential of a business.
And speaking of challenges, let's move on to the last pillar, finance and financial products.
This one is particularly interesting, especially given the context of the 2009 financial crisis.
Yeah, I mean, finance was at the heart of the meltdown.
It was, and this sector includes Clayton Homes, which is a big player in the manufactured housing industry.
Okay, I've heard of them. They make those like prefabricated houses, right?
Yeah, exactly. And they're a major part of Berkshire Hathaway's portfolio.
But I imagine the housing market crash hit them pretty hard.
Oh, it did. Sales plummeted, and they were facing all sorts of challenges.
It's tough to sell houses when nobody's buying.
Right. But on top of that, Clayton Homes was facing another hurdle. And this is where Buffett gets really fired up in the letter.
Okay, what's he upset about?
The fact that buyers of manufactured homes were having a really hard time getting affordable financing.
So, like, they couldn't get mortgages at decent rates?
Exactly. And Buffett dives deep into how the mortgage market was structured in a way that was actually disadvantageous to buyers of manufactured homes.
It sounds like he's saying the system was rigged against them.
That's basically his argument. He was particularly outraged by the difference in mortgage rates between traditional homes and manufactured homes.
So even if you had good credit, you were stuck with a higher rate just because you were buying a manufactured home.
That's what was happening, and Buffett saw it as fundamentally unfair.
Yeah, it's like being penalized for choosing a more affordable option.
Exactly. And he uses this issue to highlight a broader point about government policies and how they can sometimes have unintended consequences.
So it's not just about business, it's about the role of government and how it impacts people's lives.
Right. He's not afraid to speak his mind on these issues, even if it ruffles some feathers.
That's one of the things I admire about him. He's willing to stand up for what he believes in.
And this whole issue with manufactured housing really gets to the heart of his philosophy. You know, the idea of fairness and opportunity for everyone.
Yeah, it's not just about making money, it's about making a positive impact on the world.
Exactly. And even though we're talking about a letter written back in 2009, these ideas are still relevant today.
Absolutely, and it's a reminder that business isn't just about the bottom line.
It's about how we use our resources and our influence to create a better future.
Okay, I think we've covered a lot of ground here today.
We have, and I'm really looking forward to diving into the rest of this letter with you.
Me too, I'm hooked. Okay, so I'm still thinking about that whole invert, always invert thing. Like, do they give more concrete examples of how that plays out in their strategy?
They do, yeah, and a big one is their focus on companies with predictable futures, you know, those steady businesses we were talking about.
Right, the oak trees, not the flashy flowers.
Exactly. They're not looking for the next big tech disruptor or anything like that.
They'd rather stick with the tried and true, the stuff that people will always need.
Yeah, like those regulated utilities we were discussing earlier, you know, power companies, pipelines, that sort of thing.
Okay, yeah, so let's talk more about those because I'm still kind of wrapping my head around why Buffett is so into them.
Yeah, it can seem kind of counterintuitive, right? I mean, utilities aren't exactly the sexiest businesses out there.
Not like, Tesla or something.
All right, but that's kind of the point. Buffett isn't chasing trends. He's looking for value for companies that are going to be around for decades.
And utilities definitely fit that bill. I mean, everyone needs electricity.
Yeah, and natural gas and water. These are essential services that people rely on every single day.
So they're not going anywhere anytime soon.
Exactly. And that makes them relatively stable even when the rest of the economy is going crazy.
Okay, that makes sense. But aren't utilities, like, super capital intensive? Didn't he say he tries to avoid those kinds of businesses?
He does, yeah. He prefers companies that generate high returns without needing to constantly pour money back in.
Right, because who wants to be stuck in a never-ending cycle of reinvestment?
But he makes an exception for regulated utilities. And I think there are a few reasons for that.
Okay, I'm all ears. Lay it on me.
Well, first of all, remember the whole social compact idea.
The one where the utilities provide a vital service and the regulators allow them to earn a fair return.
Right. And that creates a certain level of predictability and stability that you don't find in a lot of other industries.
So it's like a built-in safety net.
In a way, yeah. And secondly, even though utilities require huge upfront investments, they also tend to generate pretty consistent cash flows.
So once you've built the power plant or the pipeline, you're pretty much good to go.
Yeah, and that steady stream of cash is very appealing to Buffett.
It's like a money-making machine that just keeps chugging along.
And finally, I think Buffett sees a lot of opportunity for growth in the utility sector, especially in renewable energy.
Okay, yeah, we were talking about that earlier, Mid-America's wind farms and all that.
Right, and he's not just doing it because it's trendy. He genuinely believes that renewable energy is the future.
So it's a smart business decision, and it's good for the planet.
Exactly. And Berkshire is well positioned to capitalize on this trend.
They're already a major player in the traditional utility space, so they've got the infrastructure and the expertise.
And now they're adding renewable energy to the mix, which makes them even more attractive to investors who are looking for, ESG-friendly companies.
Okay, so let's talk more about Berkshire's specific utility holdings, because I know they've got a lot of different companies under that umbrella.
Yeah, their biggest player is Mid-American Energy Holdings, and they've got a pretty diverse portfolio.
So what kind of stuff do they own?
Well, they've got a big presence in the UK with Yorkshire Electricity and Northern Electric, which supply power to almost 4 million customers.
Wow, so they're international too.
Yeah, and back in the U.S., they've got Mid-American Energy, which serves mostly Iowa, and then Pacific Power and Rocky Mountain Power, which cover 6 western states.
Okay, so lots of electricity customers.
Yeah, and they also own a chunk of the U.S. natural gas pipeline system through Kern River and Northern Natural Pipelines.
Pipelines. Didn't see that one coming.
Right. It's not exactly glamorous, but it's a steady and profitable business.
And it fits in nicely with their overall energy strategy.
Exactly. They're covering all their bases.
So who's running all this stuff? Is Buffett, like, personally overseeing every decision?
Not at all. He's very hands-off when it comes to managing Berkshire's subsidiaries.
He trusts the people he puts in charge.
He does. He believes in hiring great people and then giving them the freedom to do their jobs.
It's like he's saying, here's the keys, don't crash the car.
And in this letter, he specifically praises Dave Sokol and Greg Abel for their leadership at Mid-American.
Okay, Sokol, I recognize that name. He's the turnaround guy, right?
Yeah, the NetJets savior.
And Abel, what's his story?
Well, he came up through the ranks at Mid-American, and he's been instrumental in their success.
So he knows the utility business inside and out.
He does, and Buffett clearly trusts him implicitly.
It's like he's grooming him to be his successor, maybe?
Could be. But anyway, in addition to those two, Buffett also gives a shout-out to his longtime friend Walter Scott, who's on the board of Mid-American.
Okay, so loyalty and experience are important to him.
Absolutely. He
Yeah.
values those qualities as much as, financial acumen.
It's about finding people you can trust, people who share your values.
And I think that's a big part of what makes Berkshire Hathaway so successful.
They've got this amazing team of people who are all pulling in the same direction.
Exactly. But wait, there's one more piece of the Mid-American puzzle that I haven't mentioned yet.
Okay, what is it?
Home Services of America.
Home services. What's that?
It's a real estate brokerage firm.
Wait, hold on. Real estate. Inside a utility company.
Yeah, I know. It sounds kind of random, but it actually makes a lot of sense when you think about it.
Okay. I'm intrigued. Help me understand.
Well, Home Services has this huge network of agents across the country. They've got over 20 local brands.
So they're like the national real estate powerhouse.
Yeah, and even during the housing market crash in 2009, they managed to stay profitable.
So they're resilient. They can weather the storms.
Exactly. And Buffett believes they have huge potential for growth in the years to come.
So it's like a hidden gem within Mid-American's portfolio.
Yeah, and it shows that Buffett isn't afraid to think outside the box, to invest in businesses that might not seem like a natural fit at first glance.
It's all about finding those undervalued opportunities, those companies that have the potential to be something really special.
And he clearly sees that potential in Home Services.
Okay, so we've got power companies, pipelines, and now real estate, all under the umbrella of regulated utilities.
It's a pretty diverse mix, but it all ties back to that social compact idea. Investing in businesses that are essential to how society functions.
And that are also well-positioned to benefit from long-term trends, like the growth of renewable energy.
Exactly. And speaking of long-term trends, let's move on to the next pillar: manufacturing, service, and retail operations.
This is where things get really interesting because we're talking about a huge range of businesses here.
Oh, yeah, it's like a giant grab bag of companies, everything from paint and jewelry to furniture and even candy.
It's hard to even imagine how they manage all that diversity.
It is, but that's kind of the beauty of Berkshire Hathaway. They're not afraid to be unconventional.
And they've clearly got a knack for finding those hidden gems, those companies that are doing great things but maybe flying under the radar.
Yeah, and they're not afraid to let those companies do their thing, to operate independently and make their own decisions.
It's that decentralized management style we were talking about earlier.
Exactly. Trust your people, give them autonomy, and the results will follow.
But I imagine 2009 was a tough year for most of these businesses, right? I mean, the recession hit everyone pretty hard.
Oh, it did. No doubt about it. Sales were down, profits were squeezed, and a lot of companies were struggling to stay afloat.
So even those well-managed under-the-radar businesses were feeling the pain.
Yeah, there was no escaping the economic downturn. It was a global phenomenon.
But I'm guessing there were some bright spots, some companies that managed to weather the storm better than others.
There were, and Buffett highlights a few of them in the letter.
Okay, I'm all ears. Give me the good news.
Well, first up, you've got McLane, the food distribution company we talked about earlier.
The one that supplies Walmart.
That's the one. And they actually managed to achieve record profits in 2009.
Wow, that's impressive considering how tough things were for everyone else.
Right. And it shows that even in a recession, people still need to eat.
Can't argue with that. Food is essential.
And McLane is incredibly efficient at getting that food from producers to consumers.
So they're like the unsung heroes of the grocery industry.
Yeah, like that. But even with those record profits, Buffett points out that their margins were incredibly thin.
Meaning they had to sell a ton of stuff to make a decent profit.
Exactly. It shows how competitive the food distribution business is and how much pressure there was on prices in 2009.
Yeah, everyone was trying to cut costs and save money.
And McLean was no different. They had to work really hard to maintain their profitability.
So it's a testament to their management team that they were able to pull it off.
It is, and Buffett gives them a lot of credit for their performance.
But McLean wasn't the only bright spot, right? There were other companies that impressed him.
There were, and he mentions a few specific examples, like Benjamin Moore, the paint company, and Borsheim's, the jewelry retailer.
Okay, so even in a recession, people are still painting their houses and buying jewelry.
Some people are, yeah, and those companies were able to capitalize on that demand.
I guess it makes sense. People still want to make their homes look nice, even when times are tough.
Right. And sometimes a little bit of retail therapy can go a long way.
Okay, so we've got paint and jewelry. What else?
Well, Buffett also mentions H.H. Brown, which is a shoe company.
Shoes. Okay, that's a bit more practical.
Yeah, and they were able to navigate the recession pretty well thanks to their focus on value and quality.
So they're not selling like high fashion designer shoes. They're more about like everyday footwear.
Exactly, the kind of shoes that people need, not just the ones they want.
And that approach clearly resonated with customers in 2009.
It did, and it shows that even in a downturn, there's always a market for well-made, affordable products.
So it's all about understanding your customers and giving them what they need.
And Buffett highlights a few other companies that stood out in 2009, like Marmon and Iscar, which are both industrial businesses.
Okay, Marmon, that name rings a bell. What do they do again?
They're a big conglomerate with a bunch of different businesses, everything from railroad tank cars to water treatment systems.
Wow, so they're all over the map.
They are, and they're led by Frank Pedak, who managed to achieve a record pre-tax profit margin of over 13% in 2009.
That's incredible, especially given the economic climate.
Right. And then there's Iscar, which is an Israeli company that makes cutting tools.
Cutting tools like for metalworking and stuff.
Yeah, and they were able to stay profitable even while they were integrating a big Japanese acquisition.
So they were growing and making money at the same time? Yeah. Not an easy feat in a recession.
It shows that there are always opportunities out there. You just have to be willing to look for them.
And have the right team in place to execute.
Exactly. And those are just a few examples of the companies that impressed Buffett in 2009.
It's a good reminder that even in the darkest of times, there are always bright spots. There are always businesses that are finding ways to thrive.
And those are the businesses that Berkshire Hathaway is looking for.
The ones that can weather any storm.
Exactly. But of course, not every business in Berkshire's portfolio was a winner in 2009.
Yeah, we've got to talk about NetJets again, right?
Oh, yeah, that one was a real doozy.
I mean, $2 billion in debt, that's a lot of money to lose.
It was a tough situation, for sure.
I still can't believe Buffett didn't just cut his losses and sell the whole thing.
It probably crossed his mind, but he ultimately decided to stick with it.
So he saw something in NetJets that made him think they could turn things around.
He did, and he brought in Dave Sokol, the turnaround expert, to help make it happen.
Okay, so Sokol, he's like the miracle worker.
He's got a pretty good track record, yeah.
And what was the problem with NetJets? Why were they losing so much money?
Well, it's a complicated business, but essentially they were selling fractional ownership in private jets.
So like instead of buying the whole plane, you could buy a share of it.
Exactly. And it was a great idea in theory, but in practice, they were having trouble managing costs and generating profits.
I guess private jets are pretty expensive to operate.
They are, and NetJets was also facing competition from other fractional ownership programs.
So it was a tough market to be in.
It was, but Sokol was able to come in and make some changes, streamline operations, cut costs, and get the business back on track.
So another successful turnaround story for Berkshire.
Yeah, it's a good reminder that even the best companies can hit rough patches. But with the right leadership, they can often recover.
Okay, so we've covered a lot of ground with the manufacturing, service, and retail operations, but there's still one more pillar to go, right?
We do, yeah, finance and financial products.
And this one's particularly interesting given the context of the 2009 financial crisis.
Oh, absolutely. I mean, this was the sector that was at the heart of the meltdown.
Yeah, everyone was talking about subprime mortgages and credit default swaps and all that stuff.
Right. It was a crazy time. And Berkshire Hathaway's finance and financial products businesses weren't immune to the chaos.
So they were feeling the pain too, even though they're generally pretty conservative.
Yeah, but they were also well positioned to weather the storm. thanks to their strong balance sheet and their focus on risk management.
So they weren't taking those crazy bets that blew up so many other companies.
Nope, they were playing it safe, which ended up being a very smart move.
And didn't this sector also include Clayton Homes, the manufactured housing company?
It did, yeah, and they were facing a double whammy in 2009.
Okay, how so?
Well, first you had the overall housing market collapse, which hit everyone in that industry hard.
Yeah, nobody was buying houses no matter what kind they were.
Right, but on top of that, Clayton Homes was also dealing with this unfair financing situation that we talked about earlier.
The one where buyers of manufactured homes were getting stuck with higher mortgage rates.
Exactly. And Buffett was furious about that. He saw it as a systemic problem that was hurting families who were already struggling.
Yeah, it's like they were being punished for choosing a more affordable housing option.
And Buffett, who's always been a champion of the underdog, was not having it.
So he used his platform to speak out against this injustice.
He did. And he called for changes to the system to make homeownership more accessible for everyone.
It's a reminder that he's not just a businessman, he's also a citizen who cares about the world around him.
And he's not afraid to use his influence to try to make things better.
So even in the midst of this financial crisis, he's thinking about the bigger picture, about how these issues affect real people.
He is, and that's one of the things that makes him so admirable.
He's got this unique combination of business savvy and social conscience.
Exactly. And that's what makes this letter so fascinating. It's not just about numbers and investments. It's about values and principles.
It's about how we use our resources and our influence to create a better world.
And that's a message that's still relevant today.
Absolutely. And it's a message that I think we can all learn from.
Okay, so we've covered a lot of ground with the 4 pillars of Berkshire Hathaway.
We have, yeah. We've talked about insurance, utilities, manufacturing, services, and retail, and finance and financial products.
It's a pretty diverse mix, but it all ties back to Buffett's core investment philosophy.
You know, that invert, always invert idea, focusing on what you want to avoid, minimizing risk, and finding those steady, reliable businesses.
Exactly. And building a strong financial foundation so you can weather any storm.
And surrounding yourself with talented people who you can trust.
Right, people who share your values and your vision.
And being willing to learn from your mistakes.
And never being afraid to speak your mind.
So it's not just about making money, it's about building something that lasts.
It's about making a positive impact on the world.
Okay, well, on that note, I think it's time to move on to the next part of the letter, where Buffett gets into some really interesting stuff about investments and derivatives and all that.
Yeah, this is where things get even more juicy, so buckle up.
I'm ready. Okay, so we've gone deep on Berkshire's 4 pillars, right, because it's easy to freak out when the market is crashing or soaring.
Yeah, but Buffett is all about staying calm and focused on the fundamentals.
So it's about having a plan and sticking to it, no matter what's happening in the world around you.
Exactly, and he also emphasizes the importance of finding businesses with a real competitive edge, what he calls moats.
Moats, like around a castle.
Yeah, exactly, like those things that make it really hard for competitors to attack and steal market share.
Okay, I get it. So, like, what kind of moats is Buffett looking for?
Well, it could be a strong brand, like think of Coca-Cola or Apple.
Yeah, those brands are iconic. Everybody knows them.
Or it could be a unique product or service, something that nobody else can replicate.
Okay, yeah, like a patent or a secret formula.
Or it could be a loyal customer base, people who are so happy with a product or service that they'd never even think of switching to a competitor.
So, like, those die-hard Apple fans who wait in line for hours to buy the latest iPhone?
Exactly. Or it could even just be that the company is really good at what they do. They're just super efficient and effective.
So, like, they've got their processes dialed in, they're always innovating, they're just a well-oiled machine.
Right. And all of these things contribute to a company's moat. And the wider and deeper the moat, the better.
So it's all about finding companies that have a sustainable advantage, something that will allow them to stay ahead of the competition for years to come.
Exactly. And those are the kinds of companies that Buffett is looking for.
The ones that can withstand the test of time.
Yeah. And speaking of time, Buffett also spends a lot of time in this letter talking about corporate culture.
Okay, now that's an interesting one. What does culture have to do with investing?
Well, Buffett believes that a company's culture is just as important as its financials.
So it's not just about the numbers, it's about the people and the values.
Exactly. He wants to invest in companies that have a culture of integrity, accountability, and owner-mindedness.
Owner-mindedness, what does that mean?
It means that the employees think and act like owners. They're not just punching a clock. They're invested in the success of the business.
So they're going above and beyond, they're taking initiative, they're really passionate about what they do.
Right. And that kind of culture is really valuable. It can make a huge difference in a company's long-term performance.
Okay, that makes sense, but how do you even measure something like culture?
It's tricky. Yeah, it's not like you could just look at a balance sheet and see how much culture a company has.
This is more of a qualitative thing.
Exactly. It's about observing how the company operates, how the employees interact with each other, how they treat their customers, that sort of thing.
So it's about getting a feel for the company's vibe, its personality.
Right. And Buffett has a knack for identifying companies with strong cultures, even if it's not immediately obvious.
So he's looking for those subtle cues, those things that indicate that the company is built on a solid foundation.
And he also gives a lot of credit to Berkshire's decentralized management structure for fostering these strong cultures.
Okay, so how does that work?
Basically, he gives his managers a lot of autonomy.
Yeah.
He trusts them to run their businesses without micromanaging them,
So it's like, here's the keys, don't crash the car.
pretty much. And that approach empowers the managers and allows them to create a culture that works for their specific business.
It's about giving people the freedom to be successful.
And Buffett believes that this hands-off approach is one of the key reasons why Berkshire has been so successful.
It's about trusting your team, giving them the resources they need, and then letting them do their thing.
Exactly. But of course, no system is perfect, and even the best companies make mistakes sometimes.
And Buffett is always the first to admit when he messes up.
Oh yeah, he's not afraid to own his mistakes, which is actually really refreshing.
It makes him seem more human, like he's not some infallible investing god.
Right, he's a smart guy who's also made his fair share of blunders.
And I think people respect him for that, for his honesty and his humility.
Absolutely, and he also uses his mistakes as learning opportunities. He figures out what went wrong and then tries to do better next time.
So it's all about continuous improvement, always striving to be better.
And he's not afraid to share those lessons with others, which is why his letters are so valuable.
They're like a masterclass in investing and decision making.
And they're also a reminder that success isn't just about making money. It's about making a positive impact on the world.
Yeah, remember his discussion about the unfair financing situation faced by buyers of manufactured homes?
Oh, yeah. He was really fired up about that.
It showed that he genuinely cares about fairness and opportunity for everyone.
And that he's willing to use his platform to speak out against injustice.
It's like he's saying, it's not enough to just make money. You have to use your wealth and influence to make the world a better place.
And that's a powerful message, especially coming from someone like Warren Buffett.
So this letter, it's not just about investing, it's about life.
It is, yeah. It's about finding your purpose, using your talents, and making a difference.
Well, this has been an incredible journey, exploring Warren Buffett's 2009 letter to shareholders.
It's been a real treat for me, too. It's amazing how much wisdom is packed into these letters.
They're like a treasure trove of insights.
And even though we've covered a lot of ground today, I feel like we've only just scratched the surface.
There's always more to learn from Buffett.
Exactly. And I encourage everyone listening to seek out his letters and read them for themselves.
You won't regret it. They're full of valuable lessons that can help you in all aspects of your life.
Not just investing, but decision-making, leadership, and even just thinking about the world in a different way.
So that's it for our deep dive into Warren Buffett's 2009 letter to Berkshire Hathaway shareholders.
Thanks for joining us on this journey.
It's been a pleasure, and until next time, happy investing.